As much as we try to avoid losses as traders, some weeks aren't going to be profitable, and for me, this was one of those weeks, and I think it's a great opportunity to show you how I deal with losing weeks, both psychologically and technically. Now, in my opinion, identifying high quality A+ setups and executing on them should be your number one priority. The outcome of the trade doesn't really matter as long as you get the process right. The first step for me is the daily bias, right? If I can't identify a clear higher time frame draw, then I don't trade. I believe this is probably the most important part of my whole trading process. So what I like to do is go on the monthly, the weekly, or the daily and simply identify some kind of trend, right? Whether it's a bullish trend or a bearish trend, it doesn't really matter, because what I'm really looking at is the internal and external range liquidity targets within that trend, right? So I'm either going to be targeting internal range liquidity like bullish and bearish FVGs, or I'm going to be targeting external range liquidity, which is going to be those old highs and old lows. So simply, I look for one of those two things, external or internal range liquidity, and that is what I'm going to trade in the direction of, right? That will be my main higher time frame draw. And then what I like to do is go onto the daily, the 4 hour or the 1 hour, and make sure that there's order flow already building towards that target, right? So I'm not looking to catch these very extreme highs and lows, right? Which is like catching a falling knife. That's how some people describe it. Instead, I'm waiting for order flow to build towards that target, right? And then I'm looking to get in on these highs here. That just ensures that I'm not trying to catch the very top and bottoms of the legs, which is less probable, okay? So this is what I'm doing. I'm looking to see, is there clear daily 4 hour, 1 hour order flow building towards my target? So then once I have those two things, I have my direction for the trade and I know that price is already heading towards it. There's one more thing I look for in terms of my daily bias filter, and that is to make sure that I'm not trading within consolidating markets, right? Now, the way that I look to class consolidating markets is with a failure swing on both sides, right? So if we were meant to get a reaction from here to target this high, but price fails to get there and reverses, and then instead of sweeping out this low, price gets down here and reverses again, and we have just had a failure swing here and a failure swing here, and price is actually stuck between these highs and lows. For me, that is a range bound market and I won't trade. I'll wait for price to take either side of the range, and once that happens, then I will look to engage again. So that is essentially my A+ criteria for daily bias. Now the next step comes when we go on to the intraday time frame, so like the 1 hour or the 15 minute. Now what I'm looking for here is an aggressive sweep of liquidity away from the target in alignment with one of the daily cycles, which are essentially just plug and play frameworks that allow me to identify the direction of a certain session. And I'll explain that a little bit more when we get into the examples as well. So what I'm looking for in a bullish example is for price to sweep out some kind of sell side liquidity, and then I'll look for a reversal to go and target whatever my target is for the day, okay? And if I'm bearish, I'm looking for price to sweep out some kind of buy side liquidity. And once we get a clear reversal up here, I'll look to get in a position to go and reach for my target. Now, when it comes to the daily cycles, okay, these frameworks incorporate that sweep of liquidity. So one of them is this one called London protraction, where we look for London kill zone to aggressively sweep Asia's low. So that incorporates a liquidity sweep. And when we get that using the key times that come with the framework, I know there's a high probability of London impulsing. There's another one, it's called New York continuation, where essentially London session impulses towards the target, then pre-New York and in between session, we get a liquidity sweep. Once we get that, there's a high probability New York is going to impulse towards my target. Now, another example, last example, is where New York kill zone takes out London's low. That's the liquidity for the move. And then I anticipate New York to push towards the target. So essentially, I'm just looking for a liquidity sweep aligned with one of these daily cycle frameworks. And it's very easy to get very consistent trades using this, right? Because the daily cycles are just literally plug and play. You just look for the model. So that's how I navigate the intraday to find A+ setups. And then for my entries and my exits, it's very, very simple. So once I am confident that the session is now going to impulse towards my target, right? So once I complete that intraday step, I'm simply looking for a bullish or bearish CSD. So if I'm looking to buy towards some kind of target. I'm looking for a bullish CSD in the form of a bullish order block formation. Once I get that, I can enter off of any bullish PD array. So I'll enter off of any of these lows that retrace into a PD array. Could be an FVG, could be an order block, could be an IFVG, could be a breaker block. It doesn't matter. Then if I'm bearish and I have a target that I'm looking to trade towards, now I'm expecting the session to push there. I'll wait for a CSD, a bearish CSD, so a bearish order block to form. Once I get that, I can sell off of any bearish PD array. So I'll be looking to sell at these highs here. Can be FVG, order block, IFVG, breaker block, just like I explained with the bullish example. And then in terms of my targets, I'm literally either taking my profit at the target that I identified on a higher time frame, or I'm going to close the trade based on time, right? So if I'm trading New York session, maybe I'll close my trade at the end of New York. If I'm trading London session, maybe I'll close my trade at the end of London, or when it reaches the target. It's really about whichever one comes first. So those are my criteria for identifying A+ setups. Whenever I take a trade, I make sure that these criteria are met. But even when you have a fully A+ setup, price does not always go to your TP, right? And that's completely fine. I'm going to show you how I deal with that, how I think about it psychologically in order to stay consistent and continue to execute on my plan. So let's look at my trades from this week. All right, so both of the trades that I took were based off of the same bias on the dollar index. And obviously I took the trades on EU in alignment with that bias. So first of all, I make sure that it fits the A+ criteria. Okay, so price had most recently taken out this old low, okay, which is external range liquidity. It's a very big level of liquidity, right? In my opinion, there isn't really anything else for price to reach for. That's probably the most major level of liquidity that could have been hit. So we took out that external. Now we know that price goes back and forth between external and internal. So I was looking for evidence that price was going to go ahead and target this weekly FVG, right? Which is internal range liquidity. So I had that as a target, but there needs to be confirmation on the daily, the 4 hour, the 1 hour that price is actually moving towards that target before I take the trade. What we got here on the daily, first of all, the thing that stands out to me the most is the bullish CSD, okay? Price closed above this last down candle. That there is a bullish order block. So because we've formed that order block, the daily is bullish, okay? So that is in alignment with target. Also, we have what's called a swing point. So these three candles, right? These three candles form a swing point. And then my target for swing points is the next level of liquidity, which is this high up here. Okay, so conveniently, that was resting below the internal range liquidity. And then if we go on to the 4 hour, that was also clearly moving towards the target. Okay, price formed a bullish order block with these last three down candles. So we had a buy program on the 4 hour. Price was respecting this bullish FVG very nicely. You can see how we filled it in and rejected away. That was really nice, right? I'm pretty sure we tagged this lower one as well. But the fact that we filled in this one and rejected away, we didn't close through it. Really nice to see. And on the 4 hour, we also had two levels of equal highs, right? These equal highs up here, which were from the previous week, right? When price was consolidating. And then we had these equal highs that had been formed. So on DXY, right, we now have the A+ criteria for the daily bias, right? We have the clear target. Price is moving towards the clear target. We also aren't in a consolidation. So then with that draw, I was looking to sell Euro USD, and I'll just mark up the same targets that are on DXY, right? So we have this low here. That would be that same buy side liquidity target that's on the dollar index. So that's my main draw. And essentially, I'm looking on the intraday now for an aggressive sweep of liquidity against that draw. Okay, so in the opposite direction. And I want it to also be in alignment with one of the daily cycles. You can see price has taken out this old high, right? So we've taken out that liquidity. If I play this out a little bit more to the point where I actually took the trade, you can see that we had a very aggressive displacement to the downside. So price has formed that CSD. Okay, now this is on the 1 hour, okay, but it is the exact same framework as all the other trades that I take, right? It's just on a different time frame. You know, the market's a fractal, it's perfectly okay. So that meets the A plus criteria for my trade. Now I'm simply making sure that it aligns with one of the daily cycles. So if I put the kill zones on, this purple box here is London session. If I put the yellow one on, this yellow box here is New York session. Now this daily cycle is a variant of the New York reversal. Okay, so there's a New York reversal cycle where essentially London kill zone gets swept out by New York, right? So New York takes out London's high. And then once we get the CSD, okay, so it looks like this. Then once we get the CSD, New York should run towards the target. Now it's time for the entry. And like I said, once we get the CSD, okay, price can react off of any bearish PD array, right? So we can enter off of any bearish PD array after that. I quite liked this inverted fair value gap here, right? This bullish FVG that gave strength before, right? Price tagged it and ran higher, then got closed through. So that became my zone that I wanted to execute off of. Okay, so I entered off the IFVG. My stop loss was up here. And to the draw, it was about a 1 to 2 risk reward. Okay, somewhere around there. I hold for 1 to 2, so I would have held until it reached 1 to 2. And if I play it out, okay, you can see that price tagged the IFVG. We did give a bit of a reaction away, but by the time this candle closed, it was 5 p.m. Okay, so it's the end of that trading session that I'm personally looking to get in off, right? Ideally, okay, when price first tagged the IFVG, I was looking for price to just react away. There was only an hour left of the session to run. But instead, price came and tagged this higher FVG. And because it was the end of the trading period, now my expectations for the trade haven't been met. I was expecting price to run within a specific time window. That didn't happen. So the trade has to be at break even. And you'll see that that gets tagged. And to be fair, price doesn't even reach the draw, right? It just moves pretty choppy. Now, in situations like this, it's important to evaluate, was the trade really A plus? Okay, if it wasn't A plus, why was it not? And then you have to identify, why did I take it? But if it was an A plus setup, okay, you have to understand that you did everything that you were supposed to do, right? You executed a good trade. Just because it didn't hit TP doesn't mean that you shouldn't keep doing what you're doing, right? We're playing a game of probabilities. Not all trades are going to win. So the next step for me was to essentially wait for the next day and identify if the bias was still intact for me to execute on. So the following day, if we look at the dollar index, okay, price still has these equal highs to target. The internal range liquidity is still intact. The 4-hour is still holding that buy program, right? Prices just came into this FVG, it's filled it in and rejected a way to respect it perfectly. So the bias is still A plus, okay? So we can just go straight into that intraday price action. So now looking at Euro USD, right, we have the same kind of scenario. Price has perfectly respected this FVG. So the bias is there. Now on the intraday, I'm looking for that sweep of liquidity against the target in alignment with one of the daily cycles again. Okay, so if we jump down onto the 1 hour and just identify an aggressive sweep of liquidity. So we have a couple of highs here. We have this old high and we have this old high on the left. Both have been swept out. And this is a nice aggressive run. Now, in terms of the daily cycle, it meets the same daily cycle criteria as the day before. It's that New York reversal variant where the high is formed slightly out of session, which is perfectly fine. Essentially, it's based upon the daily power of 3, right? If we're looking for a bearish day, we want price to open up and move higher before running to the downside. So in that move higher, that's where we want to see the manipulation of liquidity. So whether we get that manipulation of liquidity in New York session or just outside of New York session doesn't really matter, because if we get that sweep of liquidity and then price confirms the run lower with a CSD, there's no reason for price to return and take out this high, right? There's no reason for price to do that. So once we get that, we can just run with it and anticipate New York to continue to run lower. So that's essentially what that cycle is based off, if you were wondering. So now we have those A plus criteria. I was looking for an entry. I'm looking for that CSD, right? If I play out a couple of candles, you can see we get a nice aggressive run to the downside. We form this bearish CSD here, right? This bearish order block. That's confirmation now that the lower time frame is also in alignment for the trade. So then once we got that CSD, I was looking to enter. I entered somewhere around here with my stop loss there. And simply I'm going to target lower prices, right? I'm looking for price to run towards that draw on the dollar index. And potentially if we get to the end of the session timing, before we reach that, I'll close early based on time, right? However, price moved incredibly slow, right? If I was to play this out, price moves incredibly slow, right? This retracement here, right? Fine. Okay, price should react from there, but it hung around until 4 o'clock. Okay, so now we have 1 hour left for price to run towards a target. But if I play it out, it just comes back. And, you know, this is not the price action that we're looking for price to form once we get an entry, right? What we want to see is for price to tag the entry and run lower, right? And just form a clear sell program towards liquidity. But instead, we just got this super slow, choppy price action for the whole session. So you can see how even though it was an A+ setup, that doesn't mean that the outcome is fully in your control, right? The thing that is in your control is the execution of the setup, right? Identifying the A+ setup with your plan and then executing on it. And then what happens from there is no longer in your control. Sometimes price is going to do stuff like this and just fuck around, and you're going to get out at break even or at a small loss. You just have to be able to identify when you have actually followed your plan to a T, and in those scenarios you still have to be happy with your performance, right? Even though I took 2 trades here and neither of them went to TP, because they're both A+ setups according to my rules, I've performed well this week. It's just the market that has presented me with unideal conditions after I've got my entry. So yeah, in terms of how do I deal with it in terms of technicals, well, if it wasn't an A+ setup, you go back and you rectify what you did wrong. When it's an A+ setup, you don't have to do anything, right? In fact, that's the most important part, not doing anything different. Even though you've lost or you've come out at break even, it hasn't hit TP, don't change anything for the next trade, right? Stick with your plan because you're there to play a game of probabilities. You need to take the exact same trade every single time, essentially, right? Or follow the exact same plan every single time, right? Let me show you a little diagram, right? That might help you visualize it a little bit more. So this is 10 trades here, okay? Every single one of these diagrams, the setup's the same, right? And this is how you want to think of it. You want your trades to follow the same plan every single time, right? You want to do your A+ criteria and follow that every single time. And, you know, even when you do that, some of your trades are going to lose, okay? But it's about consistency. It's about judging yourself based on the process. It is the execution of A+ setups. That's your job. The outcome doesn't matter. If you have a profitable trading plan and you know over a series of 10 trades, over a series of 100 trades, if you follow that plan, you're going to come out on top. The individual result of each trade doesn't matter, right? You don't want to look at it and be like, oh, I won today, I'm happy. I lost today, I'm sad. You want to look at, okay, over a series of 10 trades, I have been able to follow my plan to the T every single time, regardless of the outcome. If you're able to do that, then you should be happy with yourself, right? Regardless of whether there's 3 or 4 losses in the bunch, because you are playing a game of probabilities. You know, one thing that I say to my boy a lot, whenever we lose a trade, we just say charge it, you know, charge it to the game. That is part of the game. You know, losses are going to happen. They will always be there, and it's your job to be able to take those losses just as well as you're able to take those wins. So that's just a little insight into my thoughts when it comes to executing A+ setups and how I deal with it even when these A+ setups don't end up hitting TP. If you want to join the free Discord where I post predictions, right, that's where I included these trades as I was looking at them, then I'll leave the link to that in the description. I also record a weekly outlook. That's not on YouTube. Every week I do a weekly outlook on Sunday, and it basically is just me going over what I'm looking at for the week. So if you want to join the free Telegram, which is where I post that, I'll leave another link in the description for you too. I hope you found value in this video, and I'll catch you on the next one.